Hello and welcome. You with us here on BTTV, just looking at the markets this afternoon and not looking that great. This Thursday, we're definitely slipping in trade and the action seems fairly lackluster. Nifty is down 0.8%. Sensex also down at about cracking that 60,000 mark once again, so down over 500 points. Sunil joining us, Sunil Damania, Chief Investment Officer at MarketsMojo. Sunil, great chatting with you as always. You know, they're looking like they're on pretty feeble footing. You know, in the past we've had a fall, but then these rapid and fast-paced recoveries. This time it doesn't seem to be happening.
I think, good afternoon, Abha. I think it's a little early to say why I'm saying so, because there are various other factors happening, and there is so much uncertainty that we don't have a handle on what's going to happen. This is the first time since 1940 that yield on the 2 year and 10 year it's widened to more than 100 bips point, and it happened only 6 or 7 times since 1940 and has not happened in last 40 years. And as and when that happened, there seems to be recession in next 6 months in the US. So we don't know whether there will be a soft landing, hard landing, or no landing at all in the United States. And we need to wait and watch what on 22nd March the Fed governor comes out with the statement. And in India, I think we still don't have any handle on what's going to happen to the monsoon. If you happen to listen to the commentary given by the Mahindra and Mahindra, and they are saying they do expect auto sales to be down, they do expect tractor sales to be down, and it does give some amount of a worry about what's going to happen. But what has come as a surprise, Abha, is that if you look at mid and small cap, they seems to be holding it well as compared to the large cap. In 2022, they really underperformed very significantly, but in last 1 month or so, small and mid cap, despite the volatility, they've been holding the fort extremely well.
Interesting. I find that actually very interesting because till now everyone's been saying large cap, large cap, large cap, please safe. So when you're talking mid caps, are you being extremely stock specific? Are you going sectoral? Are you seeing any themes emerging?
So definitely, we always believe in bottom-up approach, and we don't discuss stock specific. But our
Yeah.
sense is that some of the small cap companies and mid cap companies, the valuations become extremely attractive. The price point at which they are trading at, I think it gives a lot of opportunity for capital appreciation. Having said that, we are not suggesting that everyone should take all exposure into mid and small cap, but it should be a fine balance of large, mid, and small cap. And in 2023, we have advised our investors to allocate more to the mid and small cap because we do see rally happening in mid and small cap. There are a couple of reasons, Abba, why we believe so. It's not just purely based on gut feeling, but if you look at the what's happening globally, again there seems to be a risk-on strategy coming back. If you look at the Nasdaq seems to have outperformed as compared to S&P 500 or Dow. What does this indicate? It does indicate that the risk-on strategy is back in the market. If that happens, small and mid cap normally should outperform when the risk on strategy is there in the market. Number two, even if you look at the overall market cap of India versus what percentage account of a mid and small cap, I think we are at multi-years low. So the law of average has to kick in. And number three, we have a sense that even though we don't have a handle on what's going to happen with the Fed, but RBI seems to be may do one more rate hike and then it will take a pause. And as and when the rate of interest stops climbing up, it does favor mid and small cap. So there are three basic reasons we believe mid and small cap should outperform going forward.
Okay, amazing. So valuations there looking very attractive when it comes to the mid caps and small caps. One of the other triggers that we're watching, of course, we're awaiting commentary from the Fed. But in the meantime, we will head into earnings. We're also heading into the peak summer. So are you expecting certain trends to play out at this time of year? Are you watching out for really how we may see a margin squeeze in this inflationary environment, or are you not as worried perhaps on that, given that demand continues to be robust?
So our sense is that whether there is a strong heat wave, there is a deficiency of monsoon and so on and so forth, I think there seems to be some pressure with the consumer durable segment. For the simple reason is that the pent-up demand story is already over, number one. Number two, when the rate of interest goes up, people do buy consumer durable on the EMI, and that could be one factor that could hamper the growth. for the consumer. But inflation pressure, I think that's one factor which we need to be a little worried about, because we don't clearly have an clarity in what's going to happen. And when RBI looks at the core inflation. If you have remember, Saktikanta Das in the last monetary policy he clearly says that they don't expect core inflation, which is net of food and the fuel. They remove that, and that's going to remain a little sticky. So yes, it's little challenging on that front. That what happens to the consumption story, what happens to the how much interest hike is going to impact the demand, and that in turn impact the corporate India. So there are various variables at play right now, which doesn't give a very clear picture about what could be the scenario in next couple of months. In fact, there are so many variables where no one has the clarity what's going to happen. And we always keep saying, equity is all about little long term. So what happens in 1 or 2 months, we don't know. But we are certainly confident that things should all settle down in next 8 to 10 months.
8 to 10 months sounds like a very long time in the world of equities. Okay, let's take a look at some of the movers today. We've got Tata Steel back on top. Metals are in fact seeing some traction. Airtel's been seeing some traction of late. On the downside, M&M, Reliance, some of the names there that are really sluggish in trade. Adani Enterprises also down about 3% today. Bajaj Finserv's, a couple of these on the losers list. Broadly speaking, commodities, so do they feature on your radar? Let's talk about metals, and then I'm also curious about your view on energy.
So definitely, Abha, in the previous chat, we also discussed about metals. We are extremely positive on, for the very simple reason China opening up, and that's once that opens up, I think it should give a lot of hope for the metals. Number one, number two, what happens to the earthquake in Syria and Turkey? I think would call for some of the capacity in Turkey has gone off the because of earthquake, and now they will need to rebuild that cities, and hence there's a demand. There will be a demand for the metals. We do believe that metals should do extremely well. Of course, in 2023, in first 2 months or so, they were extremely underperformed. But today, Jeffrey is coming out with a report saying that metals should outperform, and we subscribe to that view 100%. As far as energy is concerned, I think we do expect energy to remain a little subdued. We don't expect risk reward doesn't favor in goes in the favor of reward. So we prefer to remain a little underweight on the energy. But metal, we definitely believe one should remain a little overweight on metals.
Okay, so an overweight coming there on metals. That's again something that's interesting because we haven't been hearing that of late. So Sunil, clearly there is a shift or a churn in what's looking attractive at these lower levels, as you just said, and the turn coming into the market. Let me just take a look at some of the other names that are moving today, and in the mid-cap space, let's just run through some of those movers very quickly just to get an idea of the market. I think there's some mid-cap financial names. We've got some sugar and agri names that are moving, broadly speaking, a couple of these pockets, but otherwise the advance decline ratio is skewed towards the negative right now as we speak. In terms of, just wondering in terms of a year, you mentioned like, let's say about a 10-month horizon. So end of the year, where do you see us ending up, Sunil? What's achievable? I mean, if we're taking a look right now, cracking 60,000, 17,000 looking dicey, do you think we'll be back up above 20,000?
So our prediction for 2020 Nifty has been 20,100,
Okay.
which gives an idea about returns in tens, mid-tens by end of the year. And that's what we believe is likely to happen by Nifty. And I was really surprised when you said, Abha, is that in equity, 8 to 10 months are a little long. If you happen to hit Warren Buffett, he would say even 10 years is too short.
Yes, I know. But for the trader who's watching every day and wondering, if this is the right time to get in, or even for a long-term investor, they're always waiting for the right time, aren't they?
I know it's easier said, than done. Everyone wants to time the market. Everyone wants to buy when the prices are low, and everyone wants to get out of the market when the price is at the top. It doesn't happen in the real life. So what happens in the books doesn't happen in real life. I'm afraid no fund manager in the world can come and say I am always able to buy at the bottom and always able to get out at the top of the price.
Sure, that's so true. What's your view on auto right now? Do you see any kind of momentum there? We've got some decent numbers coming in from the likes of a Tata Motors or an M&M, but anything there to really make you resume an interest in auto?
So auto, I think it's clearly we had gone on the record saying that SUV segment seems to be getting a little overcrowded. And today, Mahindra came out with that report. they also very concur with what we have been stating from last couple of months, that number of SUVs have gone up and that there is a investors and consumers have been spoiled for the choice. So we do see some impact of auto slowdown, number one. Number two, I think whenever we have seen rate of interest going up, it does impact the demand for the auto. Why it's a rate sensitive sector. So till now we have not seen much of a demand because there was a pent up demand, there was a chip shortage, and hence people were not able to get this one. And chip shortage, by the way, anyway continues right now. Am I right? So I think auto, all good things are all the pricing. Of course, some of the names you mentioned, I don't give company specific comment, but I think some players who are doing extremely well in commercial vehicle, and we are extremely bullish on the commercial vehicle segment. Why? Because the government scrappage policy, because the government new norms are coming up from 1st April, where every bus will need to have an ESC compulsory. So I think, and plus, because of GST, a lot of small players are moving to the larger players and so on and so forth. I think commercial vehicle space looks more interesting as compared to passenger vehicles or the two-wheelers. So our focus is more on the on the commercial vehicles. And within that, we like some of the companies who are more focused on the EV space, because we do believe that EV is the future and some of the players will not be able to transition very successfully from ICE to EV. So one player who is a very strong in passenger vehicle in EV space, has a good presence in commercial vehicle, and also doing something great on the global side, where it has a presence in UK and China. I think that company should do reasonably well. So we believe that that company should really outperform without giving the name, but you got an idea which company I'm referring to. I think that company should do reasonably well. That's what our sense is.
Okay, fantastic. So overall, I think you're sounding quite positive, Sunil. I'm getting a really positive feel from this conversation. I don't think there's anything too much to worry about, even though we're seeing such a downtick today. It looks like it's only a good time, and things are really intact right now. Do you think there could be any kind of risk according to what happens with the Fed commentary? How much of a risk is that still to Indian markets?
So, if I got your question, are you asking how much Fed would hike the rate? Is that what
As in,
you're?
how much of a how much of a loose cannon is the commentary still going to be? Because till now we've been talking about how the India story is intact, how we're largely cushioned, how we can manage any kind of any kind of shakes that come in the global environment. But if we really do start to see a meltdown globally, then that is likely to impact us, isn't it?
Definitely, yes. And I think the meltdown sounds like a more harsh word, but I don't see that's
Yeah.
happening. I
Okay.
do believe that there will be a soft landing that will happen in US. And I think they are more sensible in terms of what policy action they need to take. So, even though there is a probability that 50 pips rate hike can come on 22nd March, what we are budgeting at this point of time is a 25 pips rate hike from the Fed. And we do get a sense there will be a couple of more rate hikes that could come from the Fed. But we don't see a scenario of a gloom and doom globally happening. And if that's not going to happen, I think India should do reasonably well. Now, if assume that what we are predicting, what we are making an assumption, underlying assumption doesn't turn out to be true, and there is a kind of a meltdown as you suggest, of course, India will have to face the consequences of that. The only silver lining in those cases would be India would still be the outperformer. Why? Because of the strong domestic growth that we are all talking about. 10.5 lakh crore kind of a capex, which has never happened in the history of India. I think it's going to give a lot of comfort level to the Indian economy. Having said that, definitely global meltdown will have an impact on Indian economy.
Okay, well, markets continue to slip as we speak. Sunil, we'll leave it there. It was great chatting with you today. Always a pleasure. And, we'll take stock of how things stand when we connect with you again in a couple of weeks. But for now, the markets are not having a great day, despite overall mood and consensus still seeming to be intact. We're just below 60,000 on the Sensex and Nifty at 17,583. It has weakened throughout the session and down about 1% right now. So clearly a weak day of trade this Thursday. Thanks so much for watching.